Hello traders, this is Forensic Forex with Deontay and I'm back with another video. This is a new series for the Forex community. Monthly NFP report will give traders ample of examples on how to approach non-farm payroll days. This series will provide context and structure like no other. Stay informed. Leave the indicators alone. Introduction. NFP stands for non-farm payrolls. Non-farm payrolls is a key economic indicator released monthly by the United States Bureau of Labor Statistics. It represents the total of paid workers in the U.S., excluding farm employees, government employees, private household employees, and employees of nonprofit organizations. The news is the excuse. NFP data tells us how many jobs were added or lost in the U.S. economy, excluding certain sectors like farming and government. It's an important indicator of the health of the U.S. labor market and overall economy because employment trends can affect consumer spending, business investments, and economic growth. However, in my trading philosophy, I see the news events as the catalyst that accelerate price movements in the market. It's like they provided the perfect excuse for traders to jump into action and make quick decisions they will regret. Sticking to a course of action during these events helps me anticipate and navigate through volatile market conditions with more clarity and confidence. Before we continue into the video, I must show you my methodology and my belief system to the market. All markets start in consolidation. Price is going to raid both sides of the consolidation. This is where traders find opportunity to find trade ideas. In scenario 1, if price raids a high or multiple highs, I want to see selling opportunities to a low or multiple lows. If price raids a low or multiple lows, I want to see a buy opportunity to high or multiple highs. Scenario 1, if price raids a high, I want to see a sell opportunity to a low. Price will move above into a overbought condition and present a selling opportunity after raiding the swing high. Once price follows the sequence, I stalk a entry to go short in a premium. Scenario 2, if price raids a low, I want to see a buy opportunity to a high. Price will move below into a oversold condition and present a buying opportunity after raiding the swing low. Once price follows the sequence, I stalk an entry to go long in a discount. The model we would use to find success trading the NFP news event is my New York model. If you're unfamiliar with this model, you can watch this mentorship video I have on my channel. Either way, you will see that the New York model application gives great trading opportunities for this news event. For this series, we will be looking at 2 Forex majors, 1 Forex cross, and gold versus US dollar. This is British pound versus US dollar right before NFP. We can see that we have our consolidation. We have our consolidation high, our consolidation low. This time period is 5 a.m. to 7 a.m. This is typically where you're going to get your consolidation. This is a dead zone. I don't find any trading setups here. I wait to trade a live session, which is the New York session, where trade should be permitted. It's not permitted to look for trades because it's unrealistic because price will give you a phase that's most likely accumulation, building in market orders, market sentiment. So buy stop orders and sell stop orders are building up right before the well-anticipated news event NFP at 8:30. We look for all our unbroken swing lows and swing highs, and that's where our liquidity pools are going to reside. So above this swing high is buy side liquidity. Below this swing low is sell side liquidity. This is a swing high. If you play it forward, you'll see why I justified it as a swing high. So you can see this is a swing high. No liquidity pool has been purged yet as price is playing forward. A crucial step to this is New York opening price, and you'll see why. So we'll play it forward, and we'll see what happens. Looks like price is going to drop down. Price goes back up, and we can see we get a raid here. So now we got a raid on buy side liquidity pool. So price just took out the buy stops here. At this point, I would be looking for a short opportunity, but I need to look for my entry. My entry needs to form first in order for me to go short. Also, we're in an overbought condition. We want to sell in this condition because we're above fair value of the New York opening price. Price is a lot more expensive. It's more ideal for us as a seller to capitalize on the higher prices so we can sell at a much higher rate. We go down to the 1 minute time frame and we're going to stalk for a specific entry. This specific entry is the only entry technique that I like to stay to because it brings consistency. It doesn't allow for confusion. So we're looking for a fair value gap that runs through a swing low, and the swing low is inside or resides inside the fair value gap. Sounds like a lot, but it's very simple when you see it. So play it forward. So 8:30, we could see price takes off even further. We can all take an educated guess that retail traders are what? Chasing price. However, we saw this purged and this purged as well. So both these levels have been purged. Buy stops taken out. But what becomes our new target? The sell side liquidity pool. We're looking for some type of reversal phase back down here, or some type of retracement at least to this level here. Price has now shot up and given us what? A potential or misleading bullish trend. A lot of retail traders may be chasing this, but we don't want to chase it. We just want to wait for our entry technique. And we're more likely to be a seller than a buyer because we can see prices way up in a premium right now. So let's take a look at what happens after NFP. So right now we have no entry technique. We don't do anything. We're still waiting on our hands, but we're stalking this entry technique on the 1 minute time frame. It must be a fair value gap that runs through a swing low. And as you can see right here, we'll zoom in. This is the fair value gap, space between that candle's low and that candle's high. And this is that swing low here. So you guys can see that better. That's that swing low. That's the fair value gap. Price is running through that swing low formation with speed. That's where we would look to take our entry right at the beginning, correction, at the end of that fair value gap. Very crucial detail is that that swing point is not at the starting point of the fair value gap or the ending point of that fair value gap. It must be in between. You would look for a one-to-one scenario. I like to look for 15 pips for 15 pips, risking 1%, 2%, 3%, or even 0.5%, depending on your risk appetite. So we're not in short yet. We have to wait for price to tap right back up into it, right? Institutional order flow entry drill. Price taps it. Now we're short there. That's where we would be short. The order would be live and we would hold. And we must risk properly. And as you can see, TP would be hit. Now let's say if we were to play this out, let's see if price gets back down to our sell side liquidity pool down there. Let's play it all the way through. So we got another news event that occurs too. PMIs, I believe. Let me double check that. Yep, PMI. And we can see right after NFP, price looks like it was going to go straight to the moon. However, if you were patient and you just waited for the entry technique, following the steps of the New York model, you'll see that you can find a feasible entry idea to trade on NFP New York session. So at 8:30, price shoots up. We have no entry technique that happens prior because price does not break either side of liquidity pools. But you will see in this example, this happened after the news event, the excuse to move price action very fast. But you'll see sometimes that the entry technique actually forms prior to the news event and a liquidity pool is broken before the news event actually drops. So let's take a look and move on to another example. We are looking at US dollar versus Canadian dollar, UCAD, just prior to the New York session. So just before the news event, NFP, and also the unemployment rate and PMI, we have consolidation. We're normally going to have consolidation in this time period, 5 a.m. to 7 a.m. This is a dead zone. This is also known as the London lunch. The London lunch is more than likely going to go into a phase of consolidation. Now, this is picture perfect. This is exactly what a consolidation looks like. There's buy stop orders and sell stop orders accumulating here. That's what the market is doing here. It's accumulating those buy stop orders and those sell stop orders below the highs and lows. Those clean highs or relatively equal highs, or those clean lows or relatively equal lows. That's what's being built into here. Market sentiment. We are going to now look to see if the market is going to break out of this consolidation, whether it breaks the high first and then gives us a short to go to the low, or whether it breaks to the low first and gives us a long to go to the high. That's why we like the consolidation. Let's find our sell side and buy side liquidity pools on the 15-minute time frame. So you can see price runs up and already runs out a 15-minute swing high. So there's buy side here. So let's mark this out. That's our buy side liquidity pool. We also have one up here. So let's get that on there. So we have two available buy-side liquidity pools. If you play it forward, we also have sell side here underneath this swing low that forms right at that 7:15 candle. So right here, we have sell side. So we'll mark that off. We'll mark off the opening price because it's crucial. We can see that we're above in a premium. We don't need an indicator to tell that. Anything above 7 a.m., it's going to be in a premium. We're overbought. We've already rated buy-side liquidity pool going into 7 a.m. New York session. So we're looking for a short opportunity. We want a short above 7 a.m. Notice as well that we're rating this liquidity pool way before the news event. So this is going to be an entry that could potentially form before the news event has even dropped. And I say this all the time. If you're going to trade a news event, there's only two ways you could go about it. You're either in the trade before the news event drops, or you get in after the trade. The GU example, we noticed that the NFP news event dropped, and then the entry formed after the news event. Let's see what happens in this example. So we can see, on the 1 minute, we're going to stalk that entry technique of a fair value gap running through a swing low, and that swing low residing inside that fair value gap. So you can see we rated that buy side liquidity pool. So let's mark that off. So if this is rated, that means our eyes immediately will go down here. This becomes our new target now. We're assuming that the market is out to get this sell side liquidity pool down here below that 15-minute swing low. Just keep playing it forward. We're waiting for the entry. Looks like the market was going to go short, but it goes back up again. This is why we got to be patient. We can't chase price. So we got another raid. So we raid two levels. Even though we rated two levels, the entry could form after breaking this first buy side liquidity pool, but it doesn't. So we patiently wait. We're not jumping the gun. There's no FOMO. And we wait for the entry technique to form. And there we go. There goes the fair value gap here to here. And there goes that swing low. That swing low is not at the start or the end of that fair value gap. It's in between those two levels. So zoom in. As you can see, that's the shorting opportunity. Where is this entry technique also forming? Above 7 a.m. in a premium overbought condition. Sellers want to sell as high as possible. That's how we get the quality sell opportunity as the seller. This entry is also forming right before NFP. Let's see if we'd actually get it. So we're not in the market short yet. We're still not in the market short. Price trades up into it. That's where we would look to go short. Though we did raid our sell side liquidity pool before getting our entry, I would still expect price to go down that way. So we play it forward, keep playing it forward, and then there goes NFP, the news event. So we would have been short here, 15 pips, 15 pips. So it's just a one-to-one scenario. It's not like we're looking for so much or we're looking for a home run, but notice how it follows the flow of where NFP would have drawn us to. It's not like we know what the news event or the data would be when it drops. Remember, I said earlier, the news is the excuse to move the price action. This is the excuse for the market makers to step in and move the market violently. In that situation, it's either going to trip up a lot of orders or get a lot of orders into the market because retail traders are going to chase. And we know we're not supposed to chase price. Look what happens if you chase this short. If you were late to this party and started going short, you could potentially win something, but it's a lot dangerous because we can see, look how price turns around, play it forward, throughout the rest of that New York session. So if you were not in that trade already, you could potentially leave it alone. You can also see there's a scenario where price does give an opposite counter to longs too. It's same entry technique, so this is just a little bonus for those that are really paying attention here. It's the same entry technique. There's a fair value gap here. Look how you go long. The long opportunity would be where? Below 7 a.m. again. It fills in this liquidity void. So I'm not saying you would want to wait for this opportunity, but if you were just following the flow of which side the market broke first in order, And following that entry after that market order flow has changed, you can see how it definitely can catch a news event like NFP. Let's move on to our next pair. Here we're looking at US dollar versus Japanese yen. So our cross, we're going to be marking off our 15-minute swing lows that we have available just prior to 7 a.m. in our news event, NFP. Here, we're not going to take this as the highest high. I'm going to take this as the highest high here. So that would be our buy side liquidity pool. We got our sell side and we got our buy side. So to make it right, we'll put our bags of money where we have our liquidity pools. We have our opening price here. It's crucial to have this on the chart too, because it's going to allow you to understand whether or not you should be looking to be a buyer or a seller. Let's play it forward, see what happens. See price comes up and raids that buy side liquidity pool that we have here between 5 to 7. Once again, it's consolidating. Look at how it's forming buy stop orders and sell stop orders to create market sentiment just before the excitement. So we raid buy side. We should be looking for most likely shorts and a premium. Now we're going to go down to the 1 minute time frame and we're going to stalk this trading idea. We're looking for a fair value gap that forms. It runs through a swing low, and the swing low is inside the fair value gap. Let's play it forward. See what we get. We don't have any yet. And there we go. We got a fair value gap here. And there goes that swing point inside the fair value gap. So we're waiting for price to return back into this. We're going to do a 1-to-1 scenario. And we're looking for price to give us 15 pips to the downside. Once again, we've rated this. So this doesn't exist anymore. It's gone. Now what happens? These become the target. That's what we're viewing that as. Our entry formed in a premium above 7 a.m. and it's forming before the news event. Run short now. Play it forward. And you can see we almost get stopped, right? But we risk properly. In order to hold this, you would have to be risking properly. If you can't hold the full stop, that means you're probably biting way more than you can actually chew. So reduce your lot size. And you can see how the news event pulls us into that side, targeting the sell side liquidity pools that are available right before the news event drops. So what's available before the news event? Sell side still. Buy side was taken, sell side still available, price comes down. We don't care about the numbers, how many jobs were added or taken away. We are not looking at that. We are looking at the price action and the sequence and how the market is breaking one side and going back to the other side. A purge, revert. That's our sell opportunity here. Here we're looking at gold versus US dollar. As always, we're looking at that London lunch period here. Now I know, even though prior to the London lunch, there is consolidation that extends outside of that time period. And we know that there's levels of buy side and sell side liquidity pools outside of the period that we're framing it of. But we're just using this to frame and give context to the session that we're going into, which is the New York session. So the London lunch is our context to give us our short-term liquidity pools, to give us an opportunity to give a story to where the market is most likely going to go. So looking for buy side, it's going to be above a swing high. We're always on the 15-minute time frame. So we're doing this on the 15-minute time frame. So this is going to be our buy side. Put the little money bag here. And then we don't have any swing lows. So we're going to take this as the lowest low of the lunch session. We have our opening price. It's our natural price indication to overbought and oversold. So we know when price moves above that, it's in a premium, oversold. When price moves below it, it's in a discount, vice versa. Oversold below the discount, overbought in a premium. So when price drops below here and raids this, we could find a long potentially. If price runs up instead, it runs this swing high. We also have this here. We could potentially see a short opportunity. So let's see what happens. So we play it forward, play it forward, play it forward, play it forward. Here, raid sell side. We're below in a oversold condition. We will more likely want to find a buy opportunity. Let's see if the market does present it. Now we just have to patiently stalk it. Does it mean the market's going to give us the entry idea? No, not necessarily. But we want to see if it's going to give us that entry idea, the one I'm looking for. Now, your entry idea may show up, but we're here specifically talking about that fair value gap that runs through a swing high for the long opportunity. And we see NFP comes out, and we don't get an entry before running back to the target, because when we were here, what was the whole idea of these liquidity pools? So this turned into what? Raid on sell side. So we took that out. That means this and this became targets. And the market gets there without us. NFP takes the price action right into it. Now, I'm not saying you could have guessed that it was going to go there simply off of sell side being taken first and the buy side still being available. But if it didn't give us the entry technique, then there's no point in risking that. It's a very risky situation. Now, people may say, "Oh, we could have took the educated guess and said these two were still available prior to the major event, so odds are it's going to run to that," which is true. But we want to stick to a methodology, and we want to step to steps and a formula. We don't want to do random situations for specific moments in time. We want it to be very concise, very consistent. We don't want to change it up. Same thing over, rinse and repeat. That's how we maintain consistency. That's how we start to see growth. And that's how we start to get familiar with the market. There's no fear in losing. So as we play it forward, we rated sell side, and then these became the target, and price smashes right through it. Now, if we were to play it out, could there be potentially a short opportunity? Yeah, there could be. Could be price trading into a bearish order blocks, fair value gaps, breakers, mitigation blocks, any order block theory, right? You can see my entry idea too. Here for the short shows itself here, I believe. So does it? No, it does not. See how this swing low is not inside the fair value gap? But price does show respect and cadence to it. Play it forward. Keep playing it. Price does refill that inefficiency. So price running up, that's a huge liquidity void there. So very interesting to see on NFP, right? We're just trying to bring a series that shows and then price changes direction. So everybody that went long was very upset that day, especially if you weren't long at the high. So the ones, whoever got long below 7 a.m., yeah, they might be happy. But those that went long up here probably are very frustrated with themselves, stuck in a paradigm shift. Market's going long, then it's going short, then it's going long, then it's going short again. It can be very confusing as a retail trader. And that's it. This brings me to the end of episode 1. Without courage, we cannot practice any other virtue with consistency. We can't be kind, true, merciful, generous, or honest. Maya Angelou. Peace.